Okay, hey guys, welcome back. I've had the opportunity to go on vacation, so I haven't really been too busy on my website or on the YouTube channel. The last thing I posted was the spreadsheet. If you guys haven't had a chance to check that out, I hope you will. I got to thinking about what different videos might people like to see or might you like to see. So what I wanted to do today, I thought I would share with you kind of the process that I use. I'll cover up a section of the chart. And then we'll look at what we think may happen based on my criteria. Obviously, your criteria will be different, your process will be different, but I thought it would be beneficial and I thought it'd be valuable not only for new traders that are just getting into options trading. You'll also know that if you watched the last video about the spreadsheet that I've made available on optionboxer.com, you'll know that it took me 3 to 5 years before I found much profitability. It's inevitable in this line of work or in this trading business that you're going to take some losses and things are going to happen. But I thought it would be valuable for me to share my process, share the things that I look at, and then walk through one by one the indicators, kind of identify what they're telling me. Without any more for me, I apologize, I was long-winded on the intro, but without any more for me, let's go and take a look at the screen. There's some things I want to start by saying for those of you that are new. If you've been trading for a while, you probably already know this. You probably already have learned it firsthand through the school of hard knocks, as they say. But the first and some of the most important things you need to remember as an options trader is you're not always going to be right. You won't always make the right decision. Even if you're directionally right, even if you look at the chart and you do everything perfectly, you get the direction right, you get volatility right, you may still make the wrong decision at the wrong time. And then the third thing that I wanted to say before we begin, you must be patient and decisive. You want to be patient and give the trade a chance to work. Just because it goes against you immediately doesn't mean it still won't be profitable. The market likes to throw head fakes, but then once you do decide to act, be decisive. So just to kind of walk through my process, the first thing you're going to want to do is determine your time frame. But it's probably always good practice if you know you want to be in the trade for 30 days or less. Maybe go to 45 days or 60 days to expiration just to give yourself that little bit of cushion. If you're right, you're still going to make money. And if you're wrong, maybe it won't hurt you as much. The next thing you want to decide is you want to determine your profit target. How much do you want to make? So let's say you wanted to make $100 on the trade. Well, you're going to have to determine what strategy you're going to use. You're going to have to determine the strikes you're going to use. You're going to have to structure the trade in a way that you can reach that $100 profit target reasonably. If you buy an out of the money call that cost you $40 and you're wanting to make 100 on it, well, that's a 300% return or almost a 300% return. It's not likely to happen. So you want to structure a trade where it is likely to happen. You're going to determine how much capital are you going to use. So you want to determine how much risk you're going to put on the table, and again, must be reasonably able to reach the profit target. The stop target is how much of that risk that you're putting on the table are you really willing to lose. Let's say you put 500 on the table, but if you lose 100, you're going to walk away, or if you lose 200. I think good practice is to determine a profit target. Let's say you wanted a $100 profit target. Well, don't risk more than maybe 50. So that's a 2-to-1 risk to reward. So just to kind of determine what risk to reward paradigm you want. I've seen people go 1-to-1, where if you're trying to make 100, you're risking 100. I've seen people go the other way, try to make 100, risk 200, just to give the trade room to breathe. But just know that if you do that over the long term, that it's very unlikely that you're going to be profitable unless you're really just great at picking the direction of the market. A process that I've used in the past, and one that I think would help a new trader or one that may have found themselves in a little bit of a losing streak, is to remove all the indicators from the chart and then just add them back one at a time. Not one on top of the other, but just one indicator on the screen at a time. See what it's telling you, document or note what it says from that indicator, and then move to the next indicator, and then the next and the next, and so forth. And we're going to try to determine based on what these indicators are telling us, and your indicators will be different. The things that you do may be different, but I thought it would be of value to see what I would do. And we're going to see if we can uncover Microsoft's next move just based on the technical analysis. We're not going to do any looking at the fundamentals. We're not going to get into any of that, although that is also good practice to kind of go to Google, see if there's any news about Microsoft that could be potentially detrimental. For the first thing I'm going to add back is the volume profile, and I'll to identify my levels. Now there's probably 1,000 ways you could identify important key levels with the stock. I like the volume profile because I don't have to guess. I just look at where volume is the highest on the volume profile. And so let's go and take a look at that here. So I can just look right here and I can see the point of control, which is this red section. I know that that's a level where traders have been active the most over the course of this 6-month period that I'm looking at. You could put this at a yearly time frame as well if that would help you. But you can see right here where I drew that level, a lot of traders have interacted at this level. Whether they're buying or selling, we don't really know, but a lot of people have been willing to trade Microsoft at that level. So that's an important level to me. And I'm just going to highlight any other levels that I think price may interact at. If you know anything about the volume profile, not only is really heavy volume of value, really low volume is also of value. So something like that right there where almost nobody was transacting Microsoft, that's also an area where you may want to take some notice. And so most of this, the odds of Microsoft trading down to 108, 110, 112, all of these levels down here is almost not going to happen over the life of the trade that we're looking to make, which is normally going to be 30 to 60 days. So we can remove a lot of these levels. Not because they're not important, it's just not likely that Microsoft is going to trade up to that level. And the last level I would draw here would be at the highs, and you can see there's a little bit of a resistance zone here. So I would draw a level there just because that's where price has rejected twice. So that level would also hold some significance in my opinion. With that, I would just go ahead and remove the volume profile because we've already highlighted what we really need to see from that. And so now we could just pick the next indicator that we wanted to look at. So in this case, I'm going to look at the 9-period exponential moving average. And what I look for is I want to see is price crossing over the 9 EMA. And you can see it tried to cross below it, but was rejected. So that would be a bullish signal to me. So let's go ahead and just make some text notes on the screen while we go through this. So the 9 EMA is bullish, and we'll just kind of add to these text notes as we go through here. All right, now I've added the 2-period standard deviation channel. It really doesn't show us much. Maybe it's on the lower half. It does look like it's sloping upward. Standard deviation channel suggests bullish. Take a look at the 200-period moving average. Very simply, we can see that it is above the 200-period moving average, so we can just say that that's bullish. Right, the 200 SMA is bullish. Let's see if we have any other indicators. Let's go to our lower indicators now. Start with the volume average. So generally when you're looking at the volume average, you want to see based on the near-term peaks or valleys in volume, is volume moving higher or lower with the direction of the current trend. So there's not much of a trend here to identify, but there is a slight downtrend. Draw it like that. And we can see from here to here, volume is also moving down. It means that the trend is getting a little bit weaker. So we would say that based on volume, it's bullish as well. RSI is neither overbought nor oversold, so there's really no indication there. If you did want to take something away from the RSI, you could see that it's turning lower. If it is moving lower, maybe it's reaching more of an oversold state, and that would also be bullish. And then finally, TTM squeeze indicator. You can see to go along with this choppy price action, you can see that the red bars indicate that this is currently in the squeeze. It's not making an extreme one way or another. It does look like it's kind of chopping around lower, which would also ultimately be a little bit of a bearish indication. In this instance, it is below the midline here, or the 0 line, so I would say that is generally bearish. All right, so I've looked at all of the indicators that I use to take a trade. The majority is bullish. I only want to be in this trade for maybe 10 to 20 days at the most. But I do want to give myself that cushion. So the most logical one for me would be this 39 days. It looks like the strike widths are $5 increments. So we'll have to take a $5 trade. And that kind of goes now to looking at the risk that you want to take. Do you want to risk 500? Do you want to risk 200? Do you want to risk 300? If you're not able to structure a trade that risks the amount that you want, then Microsoft wouldn't be the right asset to trade. Now I've kind of identified it for this trade. I have no idea if this is going to work out. I don't know if this trade is going to be a successful one. I just picked Microsoft because it was really the first thing that popped up on the screen. You may also create a small watch list of trades that you want to keep track of, keep an eye on. That way, if Microsoft doesn't trade in the manner that you want it to, or it doesn't have the strikes so that you can structure the trade that you want, you have something else there that you can look at. So we've determined that we are bullish on Microsoft. in the near term, or in the next 39 days at least. We know we only want to be in here 10 to 20 days. So we're just going to set up a bullish trade. The next thing you would want to do is try to use these levels to identify where you think price could go. So I'd want to structure a trade somewhere near this top line. And so it may be beneficial to kind of just pull it in just a little bit in case price doesn't make quite the extreme. You ultimately, if you're going to trade, in this instance, I'm going to trade a long vertical spread. If you're going to trade a long vertical spread, ultimately you want the short strike that is further away from the money to ultimately go into the money. So you want to give yourself a reasonable chance for that to happen. So instead of going all the way there, I'd probably pull it back to about maybe 140, 139. Looks like probably 140 makes the most sense. So I would set my short strike at 140. That way, if price does rally up to the level that I've kind of identified, my short strike will be in the money as well, and that means I will more than likely have met my profit target. Now it would just be a matter of how much of this $280 am I willing to lose before I cut the position and walk away from it. So you can see exactly what we anticipated would happen has actually happened. Microsoft got bullish. It went up to about the 141 area where we had kind of predicted with this other level that we looked at. But it looks like now it may be trying to get bearish. So looking at that information, now may be the time to say, okay, we didn't reach our profit target, but do we think that this is going to continue higher? So you would have to kind of go through the steps again. And I know that seems like a lot of work, but once these are second nature to you, you'll just fly right through it. I think Microsoft will continue. I ultimately think it may pull back here a little bit before testing this high again. So we got the pullback. It's pulling right back into this level that we identified a while ago. At that point, I would say, I'm still bullish on Microsoft unless it breaches this level and possibly breaches this level. At that point, we got to look at our profit and loss and say, have we reached our stop target? Have we reached our profit target? And we have to make the decisions the best that we can. So let's move ahead another week. It shot up. It looks like there was an earnings date at some point in there, and price just roared higher. And so on this trade, we were able to we were able to make $156 following the steps that I've outlaid here. I really had no idea it would be this successful. I did not have the slightest clue that it would jump this high. And now, so I've walked through everything. Now what I want to do is I'm gonna fast forward in time. And I'm going to cover up a section of the chart. I'm going to put all the indicators back on there. And then I want you to just take a moment to look at it and just try to determine, based on what you're seeing, whether it will be bullish or whether it'll be bearish. And then we'll kind of uncover it slowly to see if you were correct in your assumption. And so I've got this portion of the screen covered up so that you can't see what happens after November 1st. So looking at this is similarly to the trade that I just took. Say you wanted to hold this for the next 10 to 20 days. But there's volume if you're curious to see that. So that's not particularly bullish. You can see it looks like maybe the TTM squeeze indicator is also getting a little bit bearish. So you would have to look at all those things and determine what you think may happen next. And so I don't want to keep you waiting forever. I'm just going to go ahead and uncover it here. So you can see from right there where the red line is, where we were trying to determine what we thought price may do. Looks like it got really bullish for the remainder of that time that we were in this trade. So if you had selected bullish as your desired direction, then of course you would have been correct in your assumptions. But guys, I've been long-winded enough. Thank you so much for watching. I do hope God blesses each and every one of you this weekend. I hope you get some time to rest and relax from work. I hope this heat isn't too much. It's been just brutal here in Texas where I am. And so hopefully it's not getting you like it is me here. But if it is, hopefully you're indoors and hopefully you're able to stay cool and comfortable. But until the next video, guys, God bless and take care.